Hello and welcome to the closing beat, everybody. Happy Tuesday to you. How you doing out there? All is good? I'm glad to hear it. What's the thing that Kramer says? Hello and welcome to the closing beat. While other people are trying to make friends, we're just trying to help you get your dough straight. It's good, right? I've been known to have some voices around here. We are financial advisors here at Jazz Wealth. Hope you'll check us out, jazzwealth.com. Do we have Guess the Dow, people? Should I hit that?
Yeah, we do.
Oh.
Yeah, we got a fresh leaderboard today. We got Lawrence, Hannah, Lisa, Miranda, and the Victor P.
The Victor P.
The Victor P.
Hey, man, 5th place. That Victor P's hunting, man. He's always around.
Yeah.
I like it.
Good showing from our women demo, by the way. We are big with the women, so good that all 3 women that played are on our board. So good for them.
And very close, too.
Very close.
34 twos. Y'all are counting on the 34 twos. Victor's saying, give me just a little bit more of a pullback. Very cool, very cool. Well, hey, we talk about the stock markets here, but I got to take a brief moment and talk about today. It's a special day. As a kid growing up, today was the day that Nolan Ryan struck out Ricky Henderson to get his 5,000th home run. Did you know that, Cody?
5,000th home run?
I mean, strikeout. I said home run.
That'd be a lot of home runs.
Right
man.
there, baby. I dug out the cards, got the Nolan Ryan. I got every one of them from the Mets one, the Angels one. I was like, what? Nolan Ryan, my man. 5,000 strikeouts. Topps number 1, 1986, man. Oh, just had to dig through some of them.
You know what those are worth? Any idea?
No clue. I've got like probably 10 of each one as I was looking back there.
Oh, yeah.
Yeah, kind of cool there, man. Coincidentally, Randy Johnson and Roger Clemens are the only two who have come close to that, like 4,800 and 4,600. No other pitcher currently is anywhere near hitting that.
You little sports nerd.
Yeah. You see what I did there? And oddly enough, I found a Wayman Tisdale card in there. He's a basketball player, but more importantly, I think he passed away actually, but he was, or maybe is, a phenomenal bass player, man. That's what he did in his extra time there. So anyways, a little bit of an extra lesson for you there. Today's the day. A little bit of a sports history for you there. You don't get that from me often. But then again, you never know what I'm going to say. All right, let's take a look here. Congratulations, Mr. Nolan Wright. Still winging it, by the way. We were talking about that. That brother can still throw the ball. The markets. You remember yesterday's title of the show is like, market's not so sure about this. And today we get a little bit more of that, just not so sure about a rally. We talked about where we have every rally get sold into and every dip get bought, but we're not really making any progress. Now today, we had existing home sales come out. It's really the only economic number to come out, so it got a little more attention today. Here is the visual of your home sales. Home sales, not brand new, existing home sales, basically at 20-year-long lows here, just ever so slightly right after the financial crisis there, which is fine, right? Home sales can drag down. We got higher interest rates. You may expect that. But you take it a step further and you say, well, let me see the inventory of homes. That's hovering along a more than 20-year-old low. And so existing home sales weaker, inventory lower. What does that mean? Prices are staying pretty stable. Now, that's okay news. It's not the greatest news for the stock market, but that's what we had to go on here first thing in the morning. People want to see their prices higher, of course, but many people now are like, seems like we're on the verge of a frozen home market. Not a good one, not a bad one, but just stuck, right? Where we're all just going to stay in our homes. The S&P just couldn't get going here today with no other real news to go on. If you look at a 5-minute chart here, and let me change real quick. I'll use the ETF so that we see just the intraday. Every rally sold into, every dip was bought, ultimately with a little bit of weakness to finish up the days there. So pullbacks bought, rally sold into. The overall pullback is still in the works, still extended. We have a recipe for a stock market that could give us a bounce in here. You just would have kind of thought it would have happened today, like a little up day that just held, right? After selling off so far and breaking, we tried. You think you'd see a little bit more of that. I don't really like this idea that we're already seeing weakness below a now turning 50-day moving average. That is something that technical traders will want to take a look at and likely have already started talking about. The NASDAQ was the same way here today. It was Wayman Tisdale did die, didn't he? I thought so. Yeah. So that sucks. Yeah, that's right. I remember reading about that. But otherwise, if you want to look him up, phenomenal bass player, which just blows you away. Great music, by the way. Anyway, sorry to hear that, but I do remember that. NASDAQ, same thing. Is going to be tech-driven. A lot of Nvidia today just couldn't get things going. It started off okay. Like Nvidia looked like it was off to the races there. There we go. And just retreated all the way back to give up the day's gains, but then closing right near the day's lows. If you're a client and you haven't done it already, if you go into the dojo, your portal, search Candlesticks in the video section. There are 3 videos to explain how this works. Today, that's as bad as it gets. That's the worst type of candlestick that you can have, especially when it starts higher. So be sure to check that out if you want to learn a little bit more. If we look at the Dow, there you go, pulling back right on top of this range here. However, no one's interested. Like, you see this day right here? You got a pullback. They call it a multi-day pullback on top of what you would call minor support if you're a technical trader there. You say, okay, that's worth a go. It did for 1.5 days, right? Let's zoom in on there. 1.5 days before getting almost rejected, not quite rejected just yet. So a little extra weakness over there. If you look at gold off the 200-day moving average, it's trying, there's just, what is there, right? You have all these people saying, oh, I want to take some of my money and put it in gold. Just the silliest thing you can do. I mean, you can invest in whatever you want, right? But just the silliest thing you can do, and it hasn't paid you anything. You're not making any money there, and that continues, so it's a really tough place. Also, it's kind of like bonds, right? Yeah, people need bonds or want to have bonds, but it continues to be really, really weak there. If you think about over the last 50 years, 50 years. So if you think over the last 50 years, if you're a bond investor, the S&P averages outperformance of just over 5% compared to bonds. And that's okay. You're not trying to beat the market by buying bonds. I think we all get that. So the average outperformance of the S&P is about 5% compared to what bonds do. Okay, no problem there at all. Thanks to this decline that you actually see right here, the S&P is beating the bond market by 16%. That is the widest spread ever in history. So what does that tell you? Does that mean that bonds are a buy here? Right? You think it's overextended and you want to buy it there? Yeah, that's how I think a little bit. But nonetheless, it's the widest spread ever in history. And how many times recently have I been telling you guys that's the most it's ever been in history? That's the first time that's ever happened. That's the most extreme it's ever been in history. That's the most number of days, like gold the other day. The most number of days it made lower lows and lower highs ever in history. Do we have those sort of bad news historical things happen at the bottom of markets? Does that normally happen? I'm not sure about that. Also, I told a client I would bring this up. Dividend stocks. I've been mentioning how dividend stocks, ew, right? Nobody wants anything to do with dividend stocks. Why take the risk for the same yield you can get in the bond market, when actually get higher yield in the bond market with no risk, technically, right? So people said this year, I don't want dividend stocks. I want that. And so I had a client say, I had multiple clients say, should we not be in your dividend fund, Dustin? Thought I want to bring this up for you there because a lot of people don't look at their performance, and you should inside of your account. Here is our dividend fund in dark blue relative to the DVY, or the aggregate dividend index, if you want to use that as well. We are positive for the year. I won't say it's an active approach, but a more proactive approach to talk about or to focus on the things that we want to have. Year to date, of course, we are beating the dividend package or dividend ETF as a whole. And if you go, well, that's year to date, Dustin, man. Let's look back really far. So I went back, I just hit max. I don't know how far back that is, obviously 2018. We are beating the dividend mutual fund, or dividend ETFs themselves. And that comes a lot, not from the winners, but from how we handle the pullbacks there. So if you're ever considering joining Jazz and you wanted to see some performance, I thought I'd point that out because a lot of clients thought, oh man, my dividend fund, it's probably negative. No, your boy's working over here, right? If your account goes down, that means we lose money. I'm not letting that happen. So really cool to kind of take a look at. If you're interested and if you're a client, of course, go look at your performance. We put it right smack in the front of the page for you. Energy. Just a quick stat, right? Just a quick stat. The energy sector, one of the 11 sectors in the S&P there, is the only sector currently where 100% of all the stocks in the sector are above the blue line, the 50-day moving average, meaning 100% of all stocks in the energy sector are outpacing their 2-month average, right? So they're moving a little faster ahead of progress there, I guess is how you could kind of say it there. Compare that to the S&P, only 32% of the S&P, which you got to imagine some of that's, of course, the energy stocks, 32% of the S&P is above the blue line or outpacing the 2-month average. So weakness in the short term, I don't have to tell you that, you can kind of see it there, but just something that I just kind of wanted to point out. All right, moving on. Let's do some stocks in the news. I'll take questions if you have any questions. If you don't, then, I'll get out of your way. Do what I got to do. Schwab stock falling quite a bit. Their TD Ameritrade transition is 99% complete. The last thing they have to do is kick out the advisors that they do not want to work with. We don't work with them, so not worried about that just yet. But that's the last piece of their puzzle. In other words, it's all complete now. And now that it's done, they're like, hey, those of you that helped transition this whole thing, and some of the rest of you, you're fired. We're going to get rid of you there. They're going to do some cost-cutting initiatives to try to save about $500 million. So how's that feel? Dick's Sporting Goods is going to be the biggest mover here today, in like the world of stocks that we follow. Down about 25%, and this is something similar. Dick's said, basically Dick's had earnings that were pretty much as expected, not too bad, slight decline in sales there. But they said, we're going to focus on optimization, layoffs. We're going to focus on streamlining our cost structure. Yeah, less promotions. Layoffs, less promotions. We got to figure this thing out. That's essentially what they're doing there. Baidu, I know someone's going to ask about it. Let's talk about it. Actually, you want to see what I see? Because, if I just read these numbers off to you, it was a good beat. Let's see if I can do it. Here, do this. There you go. So here's the detailed breakdown of Baidu's earnings. Now remember, it's not in US dollars, so we're going to focus on percentages and not renminbis. I can never say that. Marketing revenue online up 15%. We're expecting to see 2% growth. We're expecting to see 17% growth. And we did quarter over quarter, 15% year over year, beat by 2% expectations. And here is in the local currencies difference there. When I say that for Baidu, the cloud services division there, that'd probably be the next slide, up 14% year over year, beat by 1%. So when you hear me rattle off those numbers, that's all I'm looking at. So beat by 1%, beat by 2%. Here are the numbers there. And the growth year over year, 15%. Total net revenue up 15%. That beat by 2%. In other words, it was 2% higher than expected. We were expecting 13% revenue growth. We got 15% revenue growth, blah, blah, blah. So there, you can actually kind of look through and see, like, all right, what was the reason for the beat for Baidu? And there you go. Got a little bit of a bounce here today. If you like that stuff, one day we could, or I could make that more of a focus, but I figure, yeah, I rattle these numbers off, and sometimes you can matter, where's this coming from? How do we know it's not 13 or 12? Or he's making these numbers up? So now you know. Lowe's. This one was pretty cool. I like looking at Lowe's and Home Depot's earnings just because they're so focal in my life, right? I always seem to be buying stuff there. Sales generally were down 9%, but the weakness was me and you, right? So me and you bought 9% less than we usually do. The pros, the pro division over there on the side, they got their separate door, and there's like they'll get the stuff for you, and the contractors come in and out. You kind of like fake being a pro so you can park over on the side. They offset the losses not the losses, but they offset the decline in the retail side of things there. Gross margins now 33%, and their cost of sales down 8%. Inventory also down 10%. So a lot of those positive things going on for them. Their inventory's less. Obviously, the cost of selling stuff went down, a little less inflation for them, and that's paying off. So good stuff. That was a good beat for them. Oh, and where'd they finish? Up 3.25%. 3.75%. Zoom, not too bad. I don't really get into this company too much. They break it out through commercial, large clients, the average subscriber, their call center. I just don't find it interesting. But if you're curious, they beat across the board. They beat on earnings. Sales were a little bit better than expected. It wasn't amazing. There was nothing there that made me say, I got to look at this. BJ's Wholesale. So they beat on overall earnings. So they made a few extra cents a share, 97 versus 85 or something, right? Total sales were down a little bit. And they said, well, what's going on, guys? Why are total sales down? Their words, we're noticing a shift in consumer behavior towards lesser expensive products and less bulk products. People are starting to change their habits there. Put it all together. We're changing our shopping habits. Apparently, we're still going out to bars because they're killing it. But we're changing our shopping habits. And credit card balances are now $1.1 trillion. Okay, why are we spending money on credit cards if everything's good? That's the first sign of things that people like to talk about. And why aren't these guys making a ton of money? If everything's so good, why is AMC stock basically done? They're doing their share conversion. Remember, we talked about it, went into detail about what it is, how it's working, and why they're ripping you off. And we actually did it on this day. You know, look at the video. We talked about that pop and said, guys, this is the opposite of good news. That's not what they're doing. Nonetheless, that takes place this Friday. And so that's the last of the garbage selling before that happens, because what a mess. I hope none of you participated in that. And if you've been watching, then that helped. Saved you some dollars there. All right, questions here. Oh, by the way, tomorrow, Advanced Auto Parts retailers. Retailers. That's who's going to report. Advanced Auto Parts, Abercrombie & Fitch, Bath & Body Works, Foot Locker, Kohl's, Peloton, and where's Nvidia? Yeah, Nvidia after hours. So that'll be the big one. All the retailers will sort of dominate the morning news, and then Nvidia will take its place after hours. Okay. Hey, Dustin. There's got two Dustins there. While your advisor's out playing golf, we're playing chess. Did I not share that one today? While your advisor is playing checkers or golf, we are playing chess. Had a fun one here, and I think they won't mind if I say, but it was a retired couple that their son apparently has run into some issues in life and has decided, I need to start over. He's come home to live with them. And they are so upset. They're like, we've been empty nesters for like 12 years. We don't want him here. So many cool jokes in there. So we're trying to figure out, how do we get you guys to buy a house for the kid? I tried to talk them out of buying the house, but how do we figure this out so you don't jack up your income tax for the year with the accounts that you have? So that was really cool. And a very, very fun back and forth if you happen to be watching. I chuckled numerous times reading through that email. AMC, 3 people, 2A, 1C to the movies. Yeah. We have it is an AMC. So there's an AMC by my house. And I almost went the other day to see Oppenheimer. I was like, I wanted to see it, but ended up doing something more fun. Yeah. Nolan Ryan cards from the 70s. Man, these are just the backup ones, too. All my other ones are in hard cases. The one that's in the hard case, I got his rookie card. I believe it's a Topps rookie card. I forget. No, I'm sorry. That's Cal Ripken Jr. Cal Ripken Jr., I've got his rookie card. I don't think I have a Nolan Ryan one. Yeah, that was my man. I'm from Texas, too, so probably helps. Yeah. What's moving the market besides Nvidia? The hodgepodge of banking stocks and consumer discretionary. Can I pull it? I don't have it up. If you were to look at like a heat map of the whole market today, it's like a Rorschach test. Like I don't even know how to say it. It's a big old mess there. So just little tiny things picking off. For example, what was it? For every penny that Apple gained today, Nvidia took 1.2 pennies away from it, right? The performance. So that one hurt. For every penny, United Health, whatever it was just like every little thing that was up wasn't up very much. Everything that was down just a little bit more. I was hoping it would get worse by the end of the day, but it did not. There's always tomorrow. What do you think about AIG? What about it? Insurance company pulling back here to the 200-day. I'm not sure. Do you own it? Have you been selling some of it? You want to buy it? You said in the past, oil as a trending commodity is a trending commodity. Yes. Do you still think it's in an uptrend? Oh, you'll never get me to try to pick the top or bottom on that one. Yes, I would say it's still in an uptrend. You have your pullback here. I would not fight against it. But I'm biased based on that mindset, so keep that in mind. I was going to see Barbie. No, but Kevin saw Barbie. Kevin's a movie nut, apparently. He's seen all the movies, so it's not weird. Like, if I've probably seen 7 movies my whole life, so to go see Barbie would be kind of odd, Cody, what's the last movie that you saw?
Oppenheimer.
Oh, it was Oppenheimer. Yeah, that was a stupid question.
Yeah. Before that, it had been a very, very long time since I watched the movie, but I liked Oppenheimer.
Okay, it was good. It was worthwhile.
If you're a history nut, yeah.
Okay, yeah, no, I'll go check it out. You're rolling over an IRA, Craig. What are the 3 best ETFs to buy? Cannot tell you that legally without getting in trouble. And also, I wouldn't buy ETFs myself, but that's because of what I do, so not allowed to say. What happened with JP Morgan today? Haven't had a chance to see the news. It wasn't as big in the news as I would have thought, but you had, 10 or 8 banks get their credit downgraded today? And it popped up on my phone, and I was like, oh, wow, they really did it. And then I went to look for it. It wasn't really talked about. So I just kind of, which is odd because it wasn't really a big news day. But, oh, Dustin, you're going with your OCSL. I said it and typed it the other way. They already reported their earnings, though, right? Yeah. So if you're looking in this space, this is the subprime. These guys take the risk. I don't know how to say it. This is a good barometer for the less than perfect credit borrower, right? And I believe it was probably 2 earnings reports ago that things were still strong there. I don't know that I want to be in that space right now with whatever's going on in that housing market. Personally, it wouldn't be a top priority for me. You want to add to the financials on the pullback there? I can't. Yeah, I got to be careful how I say it there. I can say that I love pullbacks. I don't know that this is the end of it, but I'm not one that likes to add on the way up, where some people do, and that's that they play momentum. I play short-term weakness. I prefer that. I'd rather say I got a discount, even if it wasn't the best discount, than say I paid something which ultimately could be a short-term top or whatever. So I like pullbacks. Do you like pullbacks? Jeff says, Fidelity or Vanguard? For what? That's a broad question. Like the software, is it a 529? Are you just doing a brokerage account? Did you inherit an account? Which one do I like more? Do I have friends there? I don't know what the question is there. Yeah. Oh, you guys with your Barbie. Was it a good movie? I don't know. That's one where, if I were taking a flight from, New York to California for some reason, and I had, you're flipping through the TV, I'd probably watch it. Because my wife started watching La La Land when we did that one time, and I just kept noticing. I was looking over, I'm like, well, those colors that's pretty sharp colors. And then I ended up watching it. Yeah. Jeff, if you're opening a brokerage account, I would choose neither of them myself. You can certainly save your... I guess it depends on what you're doing. If you're looking for the ultimate, easiest kind of thing to use, Fidelity's probably the better one there. I wouldn't use Vanguard. They put a lot of stinking rules on what you can do. As you get better or want to do more, they're not going to allow it. But honestly, I wouldn't choose either one of them. if you're looking for just like the super easy software, why not just like Robinhood or something for the basic stuff? Yeah. Predictions on Nvidia's earnings tomorrow. I don't do predictions. I can tell you that Nvidia beats 85% of the time on earnings. They raised, so yeah, look at them. I guess I understand that. It raised guidance quite a bit lately. It's only been down 2 of the last 8 earnings reports. And that one obviously was one you didn't want to be in the wrong direction for. But you only got 2 of the last 8 being down. Don't know that I'd bet against that one. I like what happened today, but you wake up that thing at $500 thanks to earning, or not wake up, but you know, market closes tomorrow and they just say blah 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 blah, yay AI, and it'd be at $500. They know, they're not silly. Okay, I do agree with you. Grinding. I'm going to get on out of here and wrap up the day. You guys enjoy the rest of your day or evening, and we'll be back tomorrow, of course, to do this all over again. Adios.
Hey, Dustin.
Yeah.
Everything good?
Yeah, I'm good.
Sure, everything's good?
Yeah, man. I'm fine.
Okay.